Yeah, what we're going to cover today is pretty much going to be current market analysis and also how to know when to be on the sidelines. Because a lot of people will teach you how to get in, how to place a trade, how to do this, how to do that. But it's very rare for you to get someone teach you how to also be on the sidelines, how to know when you should do nothing, because that will save you a lot of money if you can know when to just be on the sidelines and do nothing. So we're just going to cover that today, and then we'll have a look at the current market analysis and what to do from here. So, because a lot of things are really lining up really perfectly, and that was part of the reason why we had that session yesterday. It was because of the things I was seeing. So I wanted us to have that session because sometimes in as much as I can explain things via text in the group or via uh, recording a video, it's never the same when it's a live analysis where I can explain it in real time. You can ask your questions in real time. So, welcome, Celestine Obidiegu, and welcome, Kakuli, welcome, Nixon.
Hi.
Yeah, hi, Kakuli. So I'm just gonna share my screen now. Can everyone see my screen?
Yeah.
All right,
Yes.
awesome. So the first one we're gonna look at today is Ethereum. This is the first and the most important one because I talked about this yesterday and I said I was gonna go live if I do see a 4 hour break of structure on Ethereum. Now, if you look at this now, you can see that this is a 4 hour high, this is a 4 hour low, and this price action, this is a very tricky price action. And if you don't pay attention to this kind of price action, you will miss the break of structure. You can see it's very small break of structure, very tiny. And in my opinion, this is an absolute manipulation because most traders are not going to see this break of structure. Most traders. The reason why a lot of you are able to see this is because I specifically have a video where I explained this kind of price action for you to be aware that this is a complex break of structure. So that way you're looking out to see when there's a scenario like this. Because if you don't pay attention, you could think this is another run on liquidity. And you could probably be looking for sales without knowing that the structure has been broken several times. It came the first one, used the wicks, took liquidity, went lower, went into an imbalance, rallied the second time, used the wicks again, failed to close, then rallied the third time above it and closed. And after that, the next candle slumped. So now this candle slumping now, this could probably be your last opportunity for buys. If you're looking for long-term buys like investment opportunity on Ethereum, this could literally be your last opportunity because we're going into the last month of the year. Well, today is 28th. So if this market wants to close bullish, it literally has the next few weeks to move towards the upside. So the only thing you can look for in this kind of scenario is whether there's any higher time frame imbalance that you can use. You can wait for this candle to close and then look for higher time frame imbalance because right here, if you look at this on the 4 hour time frame, the only imbalance you can see is right here. So price can still decide to revisit this imbalance. But besides this imbalance, the only other imbalance you can see is right here. So it's literally this and this that has already been mitigated unless price wants to come back into it one last time, take liquidity, low resistance liquidity before we now see a reversal. So personally, because I already got in from a 30 minutes break of structure, which I outlined with I think it was Volt that we talked about this together on Tuesday, if I'm not mistaken.
Yeah.
So now, if you look at this on the 8 hour time frame, now this is where this gets even much more interesting. Look at this on the 8 hour time frame. Can you see that on the 8 hour time frame, there's also a break of structure on the 8 hour time frame right here, candle closure. on the 8 hour, on the 4 hour, this is already giving me a telltale sign that Ethereum is about to expand and explode to the all-time high. Not financial advice. Lower high, lower low, break of structure. And on this 8 hour time frame, there's barely any imbalance. This is the only imbalance we have on the 8 hour time frame. So the only thing I can do in this scenario is I can start looking for key levels price can come to. I can look for on the 8 hour, there's only this area. On the 4 hour, there's only this area. Then I can have a look at the 1 hour time frame. Now, in as much as I don't really like going straight down to the 1 hour time frame to look for points of interest besides aligning time frame, I only want to use 1 hour to align with a higher time frame. And right here, even on the 1 hour, it's still the same zones here, here. So the only thing you can do in this scenario, if you're already not on a buy from down here, the only thing you can do is you're going to have a very big stop loss. That's literally the only thing you can do at this point. Or you can look at this daily time frame. So let me zoom this in, and you hope for price to come down into this imbalance. This would be your, let me just take this out. This would be the only area. This is the only area I can see right here. Let me just use the line. So all you're going to have to do now is to be patient and wait for price to come into this position. If you're lucky and we dip into that imbalance, that could literally be the last area of interest because there's no other imbalance down here. This is the only imbalance. This is the only imbalance that we have. So it's the only area. If price mitigates this imbalance, look for 30 minutes break of structure and you can look for buys. Now, if you're buying from down here, your first area of interest, your first take profit position would be around this position. Right here will be your take profits, your first take profits, and you can also use this imbalance as well to secure some profits too. So you can use this imbalance, secure some profit down here, secure some profit down here, secure some profit up here. And after that, this will be the last area. So after that, the next thing is all-time high. But me personally, I'm very bullish on Ethereum that I think Ethereum should hit all-time high easy. And I don't really want it to spend forever to hit that all-time high. I want it to be like quick and easy. Once we see that retest, this is the last opportunity for re-entries, in my opinion. If we're going to rally, this is the last opportunity for re-entries. The next thing I want to see now is an expansion for price to really expand and move in one direction. So that's just my opinion. That's my thought process on Ethereum. The other one I want to have a look at really quickly as well is so like this USD card. So this USD card, let's have a look at USD card. So for some of you that tuned in yesterday, I talked about USD card and I said I don't really want to look for any buys on USD card anymore because of what I was seeing with the smart money divergence. Now, what I taught you guys yesterday is very important. Some of you might think it's just like normal analysis, but I literally showed you guys how to know you're being tricked, even when the trend is looking bullish. The trend is looking bullish, the market is selling. How do you know that you shouldn't be buying anymore? That is one tricky thing because a lot of you will take what I've taught you and you go to the chart and you're like, yeah, the trend is bullish. There's a break of structure. And I bought and I still took my stop loss. What's going on? What I showed you guys yesterday is what you would use to your advantage to know when to just stay on the sidelines or do the opposite of what that daily trend is showing you. Because the first thing I want you to understand is long term is bearish. Long term and bearish. And we also came into a monthly imbalance, which also aligns with a 3 month, which also aligns with a 3 month imbalance. There's a 3 month imbalance, there's a monthly imbalance, two higher time frame points of interest. So even if I'm looking for short-term buys, that's why if you watch the message I sent, I said I'm looking for a short-term buy. There was a reason I put that short-term and not long-term. Ethereum, I'm looking for long-term buys. Long-term. USD CAD, I'm looking for short-term buys. But now, yesterday I told you guys I'm not interested in buys anymore. I'm either being on the sidelines or looking for confluences for me to sell it. And one of the major confluences that I want to see is this daily low. If I should see this daily low break, my focus will only be on sales, long term. That will present us with so many opportunities to sell, which we will cover that, and I'll try as much as possible to do a lot more lives with you guys. So that way I can be pointing out the point of interest to work with. So it will be a lot easier for you instead of you just trying to figure out which area to take the trade. Now you have someone holding your hand and just showing you what to focus on. This is the point of interest. Focus on this. Scale down time frame. Look for XYZ time frame break of structure. Use that to take your trade. Because the moment here is broken, our next target is for price to run out this low resistance. The moment this here is broken. So all we'll be looking for is go to daily, go to weekly, go to 4 hour. Look for imbalance. Look for liquidity. Because the only thing price will be doing after that is displacement, imbalance mitigation, run on liquidity, displacement. After that, another imbalance mitigation, run on liquidity, another displacement until we take that low, which is right here. So that would be a very easy price action. So I would highly recommend if you've been on the sidelines or you've been very skeptical about trading, this is your opportunity. And now you guys are lucky to get 100% bonus if you sign up with that broker. For some of you that have been asking me about broker to use, like Akuli, you've been asking me about brokers for like forever. This is an
Yes.
opportunity. So I know how many times you ask me about brokers, and I always tell you guys the same thing. I don't recommend any broker. I don't recommend any broker, but this is for the first time I'm recommending a broker for you guys to use because this is something I've used it. I like to make sure that this works before I can recommend it. And another reason why I recommend them is because we have someone in the group right there that works for the company. He's the regional manager. So if you have any issues like Nixon was setting up his account today and he messaged me and all I did was just to tell the regional manager to help Nixon. And he was like, yeah, sure. And he helped Nixon walk him through the process. True or false, Nixon? Are you there with me?
Yeah, true, true.
Awesome. So, and he said he's going to see if they can get one of their customer service in the group or some way so that anyone trying to set up their account or have any sort of issues or need any kind of support, you get that one-on-one support. So it's not if you have any issues, you have to go to the website, look for someone to help you, and probably get help in like 3 days' time. So I just want you all to be able to trade, make money. Any great opportunity that is out there, I will share with you all. I just want you all to make money at the end of the day. So going back to the analysis, right here, we want to see that break of structure. Once we see this break of structure, we're looking for sell opportunities. So already we tapped inside this 16-hour imbalance. And after tapping this 16-hour imbalance, you can also see that we broke structure as well. And right here, this is the 30 minutes overall low, overall high. So be very mindful. Don't jump in and FOMO in and try to sell this from here. price can still want to come up for a retest. I'm not saying that is 100% possible, but it's very likely to happen. If this is going to keep going lower, price can still want to come back for a retest, final retest before drop. So don't jump in or FOMO in. Just allow the market to come to you. If it aligns, then you can take the trade. If it doesn't, just be on the sidelines. I'm going to say this right now, 2026 is going to be a mega year if you stay locked in now. The reason I'm saying it's going to be a mega year is because all these trades that are aligning, where you will reap the rewards, is not even here in 2025. We have just 1 month left. You'll reap the rewards in 2026. Because if this market is going to dump and run this low, this would be our next draw on liquidity. And this price range is not going to come here in like one day. This is going to take like weeks and months. And we have just 1 month left for 2025. And if here fails to act as support, do you know that there's nothing else holding price? So that simply means that in 2025, in 2026, you're literally going to have a free fall on USD card, which will be giving you so many countless opportunities to sell and sell and sell and sell and sell. So stay locked in. I've given you free resources. I've given you this is my cheapest mentorship ever. If you haven't signed up, this is your opportunity. I've made it as cheap as possible so you don't have any reason to say, I can't afford it. I know for some people, it's still a lot of money, but I can't go lower than where it's at right now. Like, I've never made this cheap before, but I just intentionally did it that way so that everyone can try as much as possible to participate, gain from it. 4 different sessions in a whole month. Besides those 4 sessions, we're still going to have sessions like this, random. When I'm free, I'll send the link. We'll have random sessions like this. It's definitely going to be more than 4 sessions, but I don't want to make any promises. But you have guaranteed 4 sessions. But every week, like this week, we've already had 2 sessions this week, yesterday and today. So, and we're not even counted out to the mentorship. So just stay locked in, go through the videos. Anything I'm outlining, you don't even have to take the trade. Mark it up on your charts. Watch the reaction. See what happens. Yesterday we'll have a session. I said, this is weak. Look what happened today. It dropped off. Imagine if you didn't know that and you were still looking for a buy. Your stop loss would have gotten wiped out. So, so right here, we just stay patient and see if price can break down this low. Once we see this daily break of structure, long term, we're looking for sell opportunities for this to continue lower. Now, you don't have to trade this as a swing trade and get into one position and want to hold it forever. You can basically be looking for intraday positions or even intra-week positions. You can get in on the Monday, Tuesday, look for exits, use the daily and the weekly averages. Excuse me. You can use the daily and the weekly averages, understanding how low USD card can go within a week. So I've covered this in one of the sessions. For some of you that were here, then you understand what I'm talking about. But if you weren't here, that simply means by you, like if you measure these candles, you will see that each of these candles, these daily candles, this one is 0.7, and this one is this one is 0.50. So on average, the daily candle on USD card does around 0.4, 0.5, 0.6, 0.7. So within, if you're an intraday trader, you can literally be targeting 0.4 and you can look for like a 4 hour imbalance and then or a daily imbalance, align it with a 1 hour imbalance, wait for a 5 minutes break of structure. And once price is going towards that direction, you can literally, let's say, for example, you got into this sell. This is a low, this is a high, this is the break of structure. Price coming up to retest. You can literally measure that retest and find where is 0.4. This is 0.4. You can literally put a line on that 0.4, and that will be your daily average. And if you're on a trade, you'll be targeting for price to hit this level. Once it hit this level, you're out of that trade because that's already around the daily range. And you don't want to keep being in the market because once price exceeds that daily range, what you will now get is a choppy price action, back forth, back forth, back forth. Example, look at this. After it's exceeded that daily range, it's now coming back because the algorithm understands that this is our daily range. Once it exceeds that range, you will now start getting back, forth, back, forth. That's why sometimes you're on a trade and you're waiting for the trade to keep going and it's not going anywhere. It's because it has exceeded its daily range. So the next move is for tomorrow. So instead of you holding that trade from today till tomorrow, why not know where is the daily range, remove yourself from the daily range, come back tomorrow or come back next week and target the next daily or the next weekly range. Get it, get out. I don't know if this makes sense.
Yeah.
So, so that's basically what I'm watching on USD card, and let's just have a quick look on now on DXY as well. On DXY, you can basically see the daily low. We keep getting very much closer to that daily low, even though we had this move to the upside. And you can see that imbalance I marked yesterday. I said this is the last line of defense. It sent price to the upside, came up, filled the remnants of this imbalance here. And after we fill that, you can see price failed to close above it, displaced to the downside. So this is already giving me too many signals that DXY is going to go lower. And if DXY is going to go lower, that's already giving me a lot of signals. Excuse me, that crypto is going to go higher, stock market will go higher, euro will go higher, gold will go higher. This is showing me signals. It's going to come lower. And the moment you see this daily break, your focus is to look for assets to trade for buys or invest for buys. So stay locked in, focus on this opportunity on Ethereum as well. If you see any break of structure, 30 minutes, that's your opportunity. I don't know, does anyone have any questions? Because that's pretty much what I wanted to explain today. Any questions, even if it's not related to today's analysis?
Anything concerning gold?
Yeah, exactly.
Gold. Yeah, TradingView is doing Black Friday. So if you want to do for 1 year, this is your opportunity. So the reason they keep showing me this on every chart is because I usually subscribe for 1 year. So they think I haven't subscribed, even though I've subscribed last month for like 1 year. So they keep trying to get me to pay them again, but I don't need to pay you guys till like 2027 or whatever. So if you're looking for cheap trading view, now is the time. So let's go to gold. So for gold, first thing first is we tapped a weekly imbalance. And when we go to the daily time frame, nothing really much to work with on daily besides this imbalance, but we're going to get to this imbalance. And after we tapped that that weekly imbalance, we broke a 4-hour high, 4-hour break of structure. And after we broke that 4-hour high, we came down into an imbalance right here. So for some of you that have been following my analysis, you can remember when price came into this imbalance. I took sales from here and I exited from this imbalance. And the reason I exited from this imbalance is because long-term I'm bullish. So the sales was just a counter trend. So price coming down here, all you want to see is count 3 time frames to the left and wait for your 30 minutes break of structure to buy to continue higher. And as you can see, even though price came down in here, it also broke not just a 30 minutes high, it also broke a 1 hour high. And if you go to 30 minutes, it also broke a 30 minutes high as well and give a beautiful retest. Right here was the retest. You can see that right here. Give a beautiful retest, rallied again, broke structure again, a high, a low, broke structure again, second break of structure. And after that, this is same time frame break of structure. For some of you that were yesterday, and I was talking about using the same time frame break of structure, you can see 30 minutes break of structure here, came back again, retested, broke another 30 minutes high, came back, retested. You can still use 4 minutes break of structure here for re-entry to get in for buys. So let's look at, let me remove all this and then we can look at current price action and what to expect. So overall, like I said, overall, I'm still very much bullish on gold. I still want to see gold continue to the upside. The only thing you do is to just keep it as simple as possible. All you do is look at the time frame. Now, we've already tapped this imbalance, so this is now irrelevant. Now, it doesn't mean that price cannot come back there, but I don't want us to focus too much on that imbalance. I want us to focus on the current price action. Now, this is an imbalance where you can see now price can still decide not to mitigate this imbalance. Why? Because of this candle. This candle right here, I don't trade candlesticks, but from my experience, I've noticed that this candle can actually be some kind of obstruction a lot of the times. So price can still have a retracement around this zone and continue higher. So now the next thing you do is you can scale through time frames. You can go to like 16-hour. You can go to 16-hour time frame. And on 16-hour time frame, this is still the only imbalance you can see. You just leave it right there. You go to 4-hour. You go to 8-hour time frame. And on the 8-hour time frame, this is still the only other area imbalance you can see. So that's already telling you that there's basically nothing here for you. It's either you're just going to let the market do its thing. Always remember, if the market is already ripping to the upside, it doesn't mean you should jump in. What you want is a retracement where you can buy and then continuation. A lot of traders make the mistake of seeing price going to the upside and jumping in impulsively and then getting wiped out. Because if price has this retracement, it's going to run your stop. So I wouldn't recommend jumping in right now. It's already too late if you fail to buy from down here. If you fail to buy from all these retracements down here, you're going to have to wait for another retracement. And so far, the only other area where I can be anticipating to see a retracement and within this entire price action is here. This is the only area. So if it doesn't retrace into this position, then it's best to just be on the sidelines. Just take it that you missed the trade. That's how I trade anyway. So that's just my opinion on gold. I'm still very much bullish, but I'm not going to jump in right here. I'll wait for a retracement before I get in. Does that make sense?
What of those who trade it on the daily, like, so they don't trade gold, or what happens?
So if you want to trade it on like the daily using like intraday trading, you can use the sessions. For example, today is Friday, and this is London session. And now for you to do this, you need to be quite advanced. I wouldn't recommend you do this if you're relatively new to my concept. So the people that have been in my program, like June, July, August, they're the ones that I taught how to do this. So this is London session, and London session came to an imbalance. You can use 1 hour imbalance, but you have to be very precise with this. It has to align with the session. If it doesn't align with the session, you shouldn't be taking the trade. So right here, this is London session. You want to see price come into an imbalance or take liquidity during London session or New York, and then look for a break of structure on 5 minutes and buy. And right here, you can see after we tapped, we created this low, So this is the low, this is the high, this is the break of structure. And you can see how price broke structure, gave you a retest. Look at the break of structure. Look at the retest. This black candle gave you a retest right there. And then it rallied to the upside. So it wouldn't have been the best risk to reward ratio trade, in my opinion. So depending on how advanced you are, you can still get in from around here, but your stop loss is still going to be right here. So the trade is literally going to be 1:1, which I wouldn't really recommend. But let's have a look at other opportunities. So this one right here, this is on, which day is this? This is on Tuesday. And you can see on Tuesday, it still did the same thing, came back into an imbalance. You look for 5 minutes break of structure and you buy. And then this is Wednesday, and it came down into an imbalance right here. Came down into this imbalance on Wednesday, broke structure on 5 minutes and rallied. Then it did the same thing on Friday, but the only thing is we don't really have much space for price to go to the upside because this is Friday and the day is nearly over. In the next 4 hours, the market is going to close. So unless it rips to the upside and delivers a good 1:2, but if not, if I'm on this trade and it hasn't delivered a 1:2 and the market is about to close, I'm just gonna close the position and be done with it because this is literally, it's not even up to 1:1 yet. And that's because today is Friday. But let's have a look at these other opportunities. Let's look at these ones. Let's look at these ones, these two. Now, if we go to 5 minutes, you can see right here. Now, right here, you can see we created a high, we created a low, and then we broke structure. This was the break of structure right here. We broke above this high. Price came back down, gave you a retest. Let's say you use this high as your entry, this low right here. Stop loss, just add a few extra pips. You can see the market would have scared you as if it was going to take that low, but it failed to take that low eventually. But you can see this one rallied and it delivered a 1:2, probably, I think. Yeah, this one delivered a 1:2 eventually. So this is for people taking it for intraday positions. And right here, you can see we have this retest. This retest wasn't really the nicest. Unless you're using the 2 minutes break of structure when price comes in there, that's where I think you probably might get a little bit of a smaller stop loss because here you can see that even on the 2 minutes, this is 2 minutes high, this is 2 minutes low, this is break of structure on 2 minutes. But at the same time, if you took the trade from here, right here would have been your stop loss. You add a few extra pips below. And your take profit will still be the same position. And right here, 1:2. Yeah, so this one, if you use the 2 minutes, it's pretty much very close to your take profit, but it wouldn't have activated your take profit yet. Oh, sorry, take this out. Yeah, the thing there is, as much as it's still going to give you opportunities, but bear in mind that gold is not really in an expansion phase. This is still consolidation. That is the reason why you can see it's rarely even giving you a 1:2. Gold that usually delivers like 1:5, 1:6, easy. It's still a consolidation. All these are consolidation phase. That is why it's not really giving you good profit potential. And if you bought it, the retracement is very scary. The retracement is very scary, and the stop loss is literally massive. So it's up to you what you want to do. Like me personally, when I'm looking at a specific pair and I'm seeing that it's doing more of a consolidation and it's not giving me that expansion to easily deliver a 1:2, and the stop losses are really massive, I literally just go to another pair instead of wasting my time trying to squeeze myself in. This is where traders make the mistake of always thinking that the best thing is to just squeeze yourself in, no matter what it takes, squeeze yourself in. Sometimes you don't have to squeeze yourself in. You just have to stay on the sidelines and look for a different pair that will deliver much better risk to reward because these gold trades, even though we're using 5 minutes and 2 minutes, still the risk to reward isn't amazing. So that's just my opinion anyway, but it still would have given you a 1:2, which is great for some of you. For me, 1:2 is like bare minimum. For me, 1:2 is literally like bare minimum for me personally. So I don't know if that makes sense. Does that answer you guys' questions?
Yeah.
Yeah, so does anyone have any other questions? Any other questions before we wrap up?
I wanted to ask a curiosity. For the packages of TradingView, which one do you use or which one do you recommend? Because I saw a lot of them on the ad of Black Friday, and yeah, I wanted to know.
Yeah, so for me personally, I literally use the normal one, the first one. I think so
I
what I
said,
paid was I think it's £7. They gave me 50% discount because I paid 1 year. So I was supposed to pay £14 plus taxes, which should be around £17 per month. But they gave me 50% discount. So instead of me paying £17 per month, I now paid £7 per month plus 20% tax. So that's it was approximately £107 for 1 year. So, and that works for me though, because
but
I
it
got,
has 20 alerts. The essential one works.
yeah,
So
20 alerts, to be honest, 20 alerts is not bad. Because if you're trading, let's say you're trading 3 pairs, 20 alerts is enough for you to set 7 alerts on each of those pairs, which is a lot. So, so it does work for me. I don't go for those the most expensive one because I don't really see the need for it. Like 100 alerts, unless I'm trading for a hedge fund, that's when I'm gonna say, okay, yeah, I'm using 100 alerts. So I don't really need 100 alerts. But maybe some of you need 100 alerts. Maybe not. So just my opinion, you don't need the most expensive one. The cheapest one works perfectly. All you need is the one that will allow you to go through different time frames and also have the 20 alerts you can set on the screen. So that's pretty much all you're going to need. Every other thing that it comes with, you're pretty much not going to use most of them. Does that make sense, Kakoli?
Yes, it does. Thank you.
All right, awesome. Does anyone have any other questions before we wrap up? No questions. All right, awesome. So the mentorship starts on Sunday, 5 p.m. So if you haven't joined, now is your last opportunity to join us. And we'll see every Sunday, 5 p.m. same time for a month. And we'll cover everything. All questions will be answered as well. And I'll just guide you all step-by-step process on how to trade, how to get in, how to get out. And the challenges you all have already stated as well. We'll go through every single one of them. So I'll see you guys on Sunday, 5 p.m. Any questions, you can drop it in the chat. If you enjoyed today's session, please just let me know what you enjoyed about it. I just want to give you all value as much as possible. This is what makes me do this more often. So I appreciate you, Celeste, and I appreciate you, Chedley, Volte, Kakuli, Nixon, Toby, Calvin, Eze, Luke. I appreciate every single one of you. If I didn't call your name, I appreciate